What if I told you there's a daily habit, seemingly innocent, that's silently eroding your financial future here in Canada? It's not just about missing payments or racking up huge debts. This one habit, often overlooked, could be costing you tens of thousands of dollars in higher interest rates on loans, mortgages, and even affecting your ability to rent a home. In fact, a recent 2023 Equifax Canada study revealed over 30% of Canadians are stuck with a fair or poor credit score. Today, we're not just exposing this financial saboteur, we're giving you the actionable roadmap to reclaim your credit, boost your score, and unlock the financial opportunities you deserve. Stay until the end for the simple daily fixes you can start today. Have you ever felt confused about your credit score? Let me know in the comments below. You might be diligently paying your bills, cutting back on expenses, trying to do everything right, yet your credit score feels stubbornly stuck. Or perhaps you face the frustration of a loan denial, a rejected mortgage application for your dream home, or even a rental application setback, leaving you wondering, why me? The uncomfortable truth is, many everyday actions, small as they seem, can quietly dismantle your credit health. It's far more complex than simply missing a payment or two. We've seen countless Canadians unknowingly sabotage their scores by simply co-signing for a friend or by not understanding the profound power held within their credit report. These aren't just abstract numbers on a screen. They are the gatekeepers to your financial aspirations. They influence your ability to buy a home, secure a vehicle, or even qualify for certain jobs in Canada. This isn't theoretical. This is your financial reality. So, how do we fix this? In this video, we're diving deep into 10 crucial, often misunderstood, areas that directly impact your credit. From debunking common credit card myths and exposing the hidden costs of too many credit inquiries, to even uncovering the surprising downside of having no debt at all. We'll dissect why your daily financial habits hold so much power and, most importantly, equip you with straightforward, actionable fixes designed to boost your credit score, starting right now. Let's kick things off with the #1 daily habit that's silently draining your credit score. And trust me, it's probably not what you're thinking. Most people immediately jump to missed payments. And while those are critical, the real silent killer for many Canadians is actually your credit utilization. Imagine your credit limit like a financial runway. Credit utilization is how much of that runway you're currently using. When you consistently use a high percentage of your available credit, lenders see you as a higher risk. It signals you might be financially stretched, even if you pay on time. Let's say you have a credit card with a $5,000 limit. If you consistently carry a balance of $4,000, your utilization rate is a staggering 80%. Lenders prefer to see this number ideally below 30%, or even better, under 10% or 20%. Think of it like a red flag waving in their face. The immediate action here is clear. Start aiming to keep your credit card balances well below 30% of your limit. A powerful trick is to pay down balances before your statement even closes. This way, the lower balance is what gets reported to the credit bureaus. Mastering this single habit can dramatically shift two of the most significant factors in your score: your amounts owed, and even indirectly, your payment history. But what about those who think they're doing enough by just paying the minimum? You're about to discover how that seemingly harmless habit is costing you thousands, and why you must stop it immediately. You know that little box on your credit card statement that says minimum payment due? It looks innocent enough, doesn't it? But for many Canadians, consistently paying only that minimum is a financial black hole, silently costing them thousands and keeping their credit score trapped. While making the minimum payment saves you from late fees and a direct hit to your credit report, it does something insidious. It allows large balances to accrue high interest over extended periods. This means you're constantly paying interest on interest and your principal barely budges. Simultaneously, your credit utilization ratio stays elevated for much longer, which, as we just discussed, is a major red flag for lenders. Consider a credit card balance of $7,000 at a typical 20% annual interest rate. If you only pay the minimum, which might be around 3% of your balance, it could literally take you over 2 decades to pay it off completely, ultimately costing you 3 or even 4 times the original amount in interest. That's a staggering sum that could have been invested or used for a down payment on a home. Your immediate action, if possible, always pay more than the minimum. Even an extra $50 or $100 a month can make a colossal difference. Create a focused plan to aggressively tackle high-interest credit card debt. Look into debt consolidation options or balance transfers if appropriate for your situation after seeking professional advice. Reducing that interest burden frees up your hard-earned cash and rapidly lowers your credit utilization. This isn't just about saving money, it's about liberating your financial future. Speaking of credit cards, there's a widespread myth about them that could be secretly sabotaging your score, and it involves accounts you thought were helping you. Many Canadians believe that once they've paid off an old credit card, the smartest thing to do is simply close the account. It feels like a clean break, doesn't it? But here's the credit card myth that could be actively decreasing your score and hurting your long-term financial health. Closing an old paid-off credit account does 2 detrimental things to your credit score. Firstly, it reduces your overall available credit, which instantly spikes your credit utilization ratio if you have balances on other cards. Secondly, and perhaps even more critically, it shortens your credit history length. Lenders love to see a long history of responsible borrowing, as it demonstrates stability and reliability. When you close that old account, you erase years of positive payment history, making you appear less established. Imagine you've had a reliable credit card since your university days, perhaps 15 years ago, with a $15,000 limit. If you close that account, you're not only losing $15,000 in available credit, which could make your other balances look proportionately larger, but you're also wiping out a significant chunk of your credit age. This can lead to an immediate and unnecessary drop in your score.
The immediate action here is counterintuitive. Keep those old accounts open, especially if they have a long history and good standing, even if you rarely use them. To keep them active, simply make a small occasional purchase, like your daily coffee or a streaming service, and pay it off in full and immediately. This keeps the account alive without incurring debt. Maintaining a longer credit history and a higher total available credit significantly boosts your score, reflecting financial maturity. But while keeping accounts open is good, constantly applying for new credit can be a whole different problem. You might be paying a hidden cost for every new application you submit without even realizing it. We're all tempted by that store credit card discount at the checkout, or perhaps you're simply trying to find the best rate on a new car loan or mortgage. But every time you apply for new credit, there's a hidden cost, a subtle hit to your score that many Canadians overlook: the hard inquiry. A hard inquiry is a formal request by a lender to review your credit report when you're seeking new credit. This is different from a soft inquiry, which might happen when you check your own score. While a single hard inquiry usually has a minimal impact, too many in a short period signals to lenders that you might be desperate for credit or taking on too much debt, making you appear riskier. This can temporarily but noticeably lower your score. Let's say within a few months you apply for a new cell phone contract, then a credit card from a department store, and perhaps a small personal loan. Each of those applications results in a hard inquiry. Individually, minor. Cumulatively, they can trigger a noticeable dip, especially if your credit history isn't extensive. Mortgage shopping is an exception. Generally, multiple inquiries within a concentrated period, like 14 to 45 days, are often treated as a single inquiry, so do your rate shopping efficiently. The immediate action is to be strategic. Only apply for new credit when it's absolutely necessary and you're confident in your eligibility. Avoid impulse applications for small discounts. If you're comparing major loans like mortgages or car loans, try to group your applications within that specific window to minimize the cumulative impact. Protecting your score from unnecessary dips helps you appear more stable and less risky to potential lenders. But what if there are errors or even fraudulent activities on your credit report you don't even know about? This next secret document is your ultimate defense, and most Canadians aren't checking it often enough. Imagine a secret document that holds the key to your financial future, a detailed history of every credit move you've made, every payment, every loan. Now imagine errors or even outright fraud lurking within it, silently damaging your score without your knowledge. This isn't a hypothetical, it's your credit report, and for many Canadians, it's the most powerful yet neglected financial tool they possess. Your credit report is compiled by credit bureaus like Equifax Canada and TransUnion Canada. It's a comprehensive narrative of your borrowing and repayment behavior. Any discrepancies, mistakes, or fraudulent accounts on this report can severely impact your credit worthiness, making it harder to secure loans, rent properties, or even get certain jobs. These errors can linger for years if not addressed. Perhaps you canceled an old gym membership, but a small recurring bill somehow slipped through the cracks and was sent to collections. Or maybe, chillingly, an identity thief opened a credit card in your name, racking up debt you know nothing about. Without regularly checking your report, these silent saboteurs can go undetected, causing significant and unfair damage to your score. Here's your crucial immediate action. In Canada, you are entitled to a free copy of your credit report from both Equifax and TransUnion annually. Make it a non-negotiable habit to check both reports at least once a year, or absolutely before any major financial application like a mortgage. Scrutinize every entry. If you find any errors or suspicious activity, dispute them immediately and rigorously with the credit bureau. This is your right and your responsibility. Ensuring the accuracy of your credit report is your frontline defense against errors and identity theft, safeguarding your financial reputation. But speaking of protecting your credit, there's a common act of kindness that, if not approached with extreme caution, can absolutely devastate your credit overnight. It's called cosigning, and it's a trap many unsuspecting Canadians fall into. Someone you care about needs a loan, and they ask you to cosign. It feels like a simple act of generosity, a way to help a friend or family member get on their feet. But for many Canadians, cosigning is a financial trap, a seemingly innocuous step that can utterly obliterate your own credit score overnight, even if you never see a dime of the money. When you cosign a loan, you aren't just vouching for someone, you are legally agreeing to become 100% responsible for that debt. This means if the primary borrower misses payments, pays late, or worse, defaults entirely, it hits your credit report just as hard as it hits theirs. Their financial missteps become your credit nightmare. Let's imagine you cosign a student loan for a relative who then struggles to find work after graduation and misses several payments. Or perhaps a car loan for a friend who unexpectedly loses their job. Every single missed payment, every late payment will show up on your credit report as a negative mark, directly impacting your score, regardless of your own perfect payment history or whether you ever benefited from the loan. Your immediate and critical action here: think long and hard, with extreme caution, before ever co-signing for anyone. Never co-sign unless you are fully prepared and financially able to pay the entire debt if necessary. Understand that this isn't just a gesture, it's a profound financial commitment that directly links their financial behavior to your own. Protecting your credit from external risks and the potential defaults of others is paramount to maintaining your own financial independence and future opportunities. But it's not just big loans or co-signing that can cause unseen damage. Sometimes it's the smallest, most forgotten bills that quietly, yet devastatingly, tank your score. We often focus on the big financial commitments: mortgages, car loans, credit cards. But here's an unseen danger that blindsides many Canadians: how seemingly insignificant, small unpaid bills can stealthily, yet severely damage your credit score. It's not just about traditional lines of credit. Overdue utility bills like hydro or internet, outstanding phone bills, even forgotten parking fines or library overdue fees can be sold to collections agencies. Once an account goes to collections, it's a major red flag on your credit report, staying there for years and significantly impacting your score. Lenders see this as a sign of financial irresponsibility, regardless of the amount. Consider an old internet bill you genuinely forgot about after moving, or a $50 medical bill that got lost in the mail. These might seem trivial, but if they escalate to a collections agency and are reported, they can inflict damage comparable to a missed credit card payment, disproportionate to their actual amount. This negative mark can actively work against you for up to 6 or 7 years on your credit report. Your immediate action: pay every single bill on time, no matter how small. Treat a $20 phone bill with the same seriousness as a $2,000 credit card payment. Set up automatic payments for recurring bills whenever possible, or use calendar reminders. This proactive approach ensures no small oversight becomes a major credit headache. Preventing these lingering negative marks is crucial for a clean credit history and a healthy score. But what if you've been so responsible, so diligent at avoiding debt that you have no credit history at all? You might think that's a good thing, but for lenders, it creates a surprising problem. Are you credit invisible, and why might that still hurt you? For years, we're told that debt is bad, to avoid it at all costs. And while financial prudence is absolutely vital, there's a paradox many Canadians face: being credit invisible. This means having so little or no debt that you actually lack a credit history, and surprisingly, that can still hurt you when you need it most. Lenders, whether for a mortgage, a car loan, or even just to rent an apartment, need to assess your ability to responsibly borrow and repay. If you have no credit accounts, no credit cards, no past loans, there's nothing for them to evaluate. You're a financial ghost, and while that sounds safe, it makes you a high-risk unknown, making it incredibly difficult to get approved for future financial products. Imagine a young adult who's always paid cash for everything, never used a credit card, and has no student loans. When they try to sign their first apartment lease or secure a modest car loan, they're often met with rejection, not because they have bad credit, but because they have no credit. Lenders have zero data points to assess their credit worthiness, and that absence becomes a barrier. Your immediate action if you're credit invisible: start building credit responsibly and strategically. Consider applying for a secured credit card, where your limit is backed by a deposit you make, making it low risk for the lender. Use it for small, regular purchases like groceries or gas, and pay the balance in full every single month. Alternatively, a small credit builder loan from a financial institution can also be an option for establishing history. The key is consistent, responsible use.
Establishing a positive credit history isn't about getting into debt, it's about demonstrating financial responsibility. It opens doors to future financial opportunities that simply require a track record. And speaking of major financial opportunities, for Canadians dreaming of homeownership, your credit score is undeniably, unbreakable linked to your mortgage. For countless Canadians, the dream of homeownership is paramount. But what many don't fully grasp is the unbreakable, crucial link between your credit score and your mortgage. This isn't just about getting approved, it's about saving you tens of thousands of dollars over the lifetime of your loan. Ignore this link at your peril.
In Canada, your credit score is one of the most critical factors a lender uses to determine not only your eligibility for a mortgage, but perhaps more significantly, the interest rate you'll be offered. A higher, healthier credit score signals to lenders that you are a low-risk borrower, making them more willing to offer you their most competitive, lowest interest rates. Conversely, a lower score pushes you into higher rate tiers, costing you substantially more. Let's put this into perspective. On a $500,000 Canadian mortgage, amortized over 25 years, a difference of just 0.5% in your interest rate due to a lower credit score could translate to an additional $20,000 to $30,000 in interest payments over the life of the loan. That's money you could have used for renovations, investments, or simply enjoying life instead of lining the bank's pockets. This isn't small change, it's life-altering. Your immediate action. If home ownership is on your horizon, prioritize your credit health months or even a full year before you even think about applying for a mortgage. Actively work on improving your score by implementing the strategies we've discussed. Get your credit report in order, pay down debt, build up your credit age. This proactive approach is a non-negotiable step towards achieving your home ownership dreams affordably. Securing a lower interest rate can save you a truly substantial amount of money, making home ownership not just accessible, but significantly more affordable in Canada. Now, with all this knowledge, what are the absolute simplest, most impactful daily fixes you can start today to see your credit score boost fast? We've uncovered a lot today, from hidden habits to surprising myths. But if you're feeling overwhelmed, don't be. Let's boil it all down to the 3 simplest, most impactful daily fixes that will start boosting your credit score fast beginning today. First, and arguably the most crucial habit, pay everything on time, every time. This is the bedrock of good credit. Whether it's your credit card, your phone bill, your rent, or that forgotten parking ticket, consistency is key. Payment history accounts for a massive portion of your score, so make punctuality your financial superpower. Second, keep your credit utilization low, ideally under 30%. Remember that credit runway metaphor? The less of it you're using, the more financially responsible you appear. Aim for 20%, even 10% if possible. This shows lenders you're not overly reliant on borrowed money and manage your credit wisely. And third, check your credit report annually and dispute any errors immediately. You are your own best advocate. Proactive monitoring ensures accuracy, catches identity theft early, and protects your financial reputation from unfair blemishes. It's a simple, free checkup for your financial health. Imagine seeing your score steadily climb month after month simply because you consistently paid every bill, kept your credit card balances low, and diligently reviewed your credit report. This isn't wishful thinking, it's the inevitable outcome of adopting these fundamental habits. They are the fastest, most effective levers you can pull. Your immediate challenge: pick just one of these 3 habits to start implementing today. Set up an automatic payment for one bill. Make a plan to pay an extra $50 on your credit card. Or open your calendar right now and schedule a reminder to pull your free credit reports. The power to transform your credit is within your reach. And remember,
Every day you delay these actions, you're potentially leaving money on the table. Every single day you postpone adopting these crucial habits, you are potentially costing yourself hard-earned money and inadvertently limiting your financial freedom here in Canada. Your credit score isn't just a cold, impersonal number. It's a dynamic reflection of your financial responsibility, and it serves as a powerful gatekeeper, either opening wide or firmly shutting doors to your financial aspirations. Remember this profound truth: financial success isn't about achieving instant perfection, it's about embracing unwavering consistency. Take decisive control of your credit journey, and you fundamentally seize control of your entire financial destiny. If these insights into dramatically improving your credit score resonated with you and you're ready to take charge, please don't keep this video to yourself. Give it a powerful thumbs up to show your support, and subscribe to our channel right now for more truly practical, actionable Canadian finance tips that cut through the noise. Most importantly, I want to hear from you. In the comments below, tell me, which one of these transformative habits will you commit to implementing starting today? Your journey to a stronger credit score begins with that first intentional step. The pathway to a truly strong credit score, and ultimately to unlocking genuine financial freedom and opportunity in Canada, truly begins with a deep understanding of these critical daily habits. You now possess the knowledge, the actionable strategies, and the power to fundamentally transform your credit health. Don't wait. Take that crucial first step. Thank you for investing your valuable time with us today. And here's to building a significantly stronger, more prosperous financial future, one smart and deliberate credit decision at a time.